we had a kind of like a custom tech stack that we built in the hotels. But that being said, we've got, custom built AI agents within my business. We've got deal analyzers that analyze, pretty much any asset class that you can take an OM, a rent roll, a lease and funnel all of this through our LLM, and have, an analysis within 60 seconds.
All right. Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appelman. Today we're joined with Matthew Aitchison. He's a seasoned commercial real estate investor, entrepreneur, and speaker who has built a top 1,000 real estate team and is now leads Imigos Group while hosting the Millionaire Mindset Podcast. Matthew, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Man, appreciate you having me, Josh. Like many aspiring and active real estate investor, right? I got into the space because I wanted to build wealth and financial freedom, take back control of my time. Of course, I got into real estate and it was slow and challenging and a lot of failing forward moments over the years. I've been in the space since 2010. So I graduated from UC Santa Barbara, had this expensive piece of paper and, thought I was going to take places, quickly learned that, $30,000, $40,000 was not necessarily going to the goals that I was looking for. So I started looking around and of all places saw a Craigslist ad back in 2010, real estate mentor seeks real estate mentee. That was, secret language for come work for me for free for no pay. But that was kind of how I broke into the space. And this was back in 2010 when foreclosures were everywhere all over California, post-financial crisis. And I interned for a guy for a year for free who was flipping houses on the courthouse steps and kind of helped him flip, a couple hundred houses in that year. And he was, clipping 60, 70 grand a house. I was making nothing, but I'd learned, how to analyze and underwrite a deal. I'd learned project management on the deal. I'd learned how to dispose, and market and sell the deal. And so I'd kind of like soup to nuts, learn this process and went, man, I think I can do this. But I was 21, living at home, still under the roof of my dad, couldn't even pay him rent. And that led me to just, realizing that it's not necessarily about the resources that you have, but the resourcefulness and the, attitude that you have in terms of how you're going to, kind of close the gap on something that you feel is an obstacle. So I, long story short, was tacking up bandit signs, doing cold calling, anything I could to find my first deal. That literally led me to the neighborhood cat lady house in an area of Sacramento, which is where I'm from. And I remember signing the contract, $75,000, 3-bedroom, 1-bath house. I left this woman's home. I got into my car. I was so fired up. I was fist pumping, discount double checking on the way to my car. I adjust the rear view mirror and I look at myself and I kind of had that oh shit moment of I'm still 21. I've never bought a house in my life. I'm broke. I have zero money. How the hell am I going to do this? But one of my early mentors told me, if you find a great deal, the money will follow. And so I subscribed to that mindset. I ended up finding hard money first for 90% of the purchase price. A private money second for the remaining 10% down payment and the holding costs while I was holding the asset and renovating it. And I ended up selling that property, paying off the first, the second, and netting $106,000 on top of that. And that was like my big light bulb moment of I can go out and find great deals and the capital will come. And so I went on to, flip a couple hundred houses after that myself. And quickly learned that you're only as good as your last flip. That's active income. I got to still trade time for money. I need to figure out how to get more mailbox money, that horizontal info. I started flipping 2, holding 1, flipping 2, holding 1. That led me quickly to learn that portfolio that was probably not going to move the needle forward as quickly as I wanted to on kind of my financial freedom goals, that I was going to need to own a lot of to get to where I want. So that led me over to commercial real estate, and I ended up buying my first shopping center, creative finance as well. That led me to buying my second, my third hotel, commercial real estate assets. So today, Fast forward, I own and operate commercial shopping centers, boutique hotels, medical office buildings, kind of a couple different asset classes. I've got a mobile home park, things like that, but all very focused on creative finance and now commercial real estate development.
Okay, got it. Good deal. That's truly starting out in the weeds for free,
In the trenches,
and
baby.
yeah, that's amazing, and it's kind of cool going on Craigslist, finding a post, and that's how it works. Timing is everything, of course. So your mentor, his timing couldn't have been any better. Say now it's different times, but same
Yeah,
concept,
very different. Yeah,
same
and I
concept.
think it just was a reminder to me too of like, you never know where you're going to find that relationship that's going to change your life. And I've had many of those relationships and kind of doors open at different points of my journey. But it is a reminder that like whether it's Craigslist, whether it's in the grocery store, I've met investors that have invested in my deal. I mean, one of my top private lenders that has done probably close to 100 private loans for me over the years, and probably over $10 million invested with me in different deals. I found them through a mailer that I ended up sending them. Wanted to go buy their house. The guy said, I'm not going to, you're not going to buy my house, but I like you. I'll take the proceeds from this deal and I'll invest in your next flip. And that was, how I met a private lender that completely changed my life. So you just never know who's going to come into your world that can change your life. And that's where I'm always, trying to make sure that I'm building relationships, because as much as financial currency is a main tool and component of building wealth, what I've learned is relationship currency is equally, if not more important.
Yeah. You never know, and you never know who people are going to become too. So influence comes in many different ways.
True.
And don't be burning bridges on your path there. So,
100%.
Um, and flipping real estate, fix and flips, it is truly transactional, and it is brain damaging because it'll keep you on a hamster wheel. Everybody wants to get off the hamster wheel, but
Right.
there's different traps that come along the way that feel good, but you're one flip away from just another disaster. So it's getting the income to where it's generating predictable revenue to where you can go off and create other profitable ventures too. Um, how many single family houses did you get up to?
So I had about 20 in my portfolio. And then I had some, fourplexes, duplexes, things additional to that. And then over time, I started either 1031 exchanging those into other opportunities, or I was just, selling them and paying taxes and kind of, creating some liquidity that I could strategically invest in other deals. Because pretty much all of my flips, outside of, call it a handful over the course of, 7-8 years and a couple hundred flips, I would say 95% of them were using 100% of OPM. And so I was really trying to stack, the proceeds and roll those into more passive income vehicles that were generating some recurring revenue. But I've always been a creative finance guy. That's, I've always, looked at how can I get into an opportunity or a deal with little to none of my own money. But as I started getting into more of the commercial projects, I started realizing that I needed to have some more skin in the game, and wanted to have more skin in the game, because the ROI, the upside on your time, your money, your resources in commercial real estate was far greater than single family. So I really started to double down with that mindset in terms of how I was putting my capital stacks together.
Tell us about your first commercial deal.
Yeah, so my first commercial deal was from a guy that was a broker in my market. He kind of played the single family commercial side of things, and this local family had a little neighborhood strip center. Your liquor store, the nail salon, the deli, things like that. And it was just sub $1 million, and they were looking to sell. I had one of my private lenders that I met from that mailer. They gave me a private money first on it, and I was able to get a private money second on it as well. There was some value add component to it, so there were some spaces that needed to get leased up. So ultimately, I was able to structure that deal with 100% financing. I was able to force value into the asset, so I drove up the revenue. I kind of stabilized the operating expenses. And in commercial real estate, value is created based on kind of a cap rate approach, right? So I was able to increase the net operating income, stabilize those income streams in the whole center by getting, stronger more longer term leases. And that allowed me to, based on the cap rate tied to similar properties like that, inflate the value of the asset, that I was then able to go back to a lender and essentially do the Burr method like you would on a single family house. I just did it on a commercial property, and I was able to clear out my private money first, my private money second, and ultimately was sitting now with a new long-term fixed loan that was, cash flowing about $48,000 a year. And that was kind of like my big aha moment of like, man, if I can just buy one commercial asset a year instead of doing 10, flips a month or, 100 flips a year, if I could just do one commercial property a year, when all is said and done, that nets me $50,000 a year, and I can do that for the next decade, I can get myself to $500,000 in passive income. And the beauty of obviously commercial real estate is, once you get those leases locked in, they're longer term leases, you're essentially, stabilizing an income stream on an asset that allows you to kind of collect that mailbox money, right? And actually inflate the value, not necessarily through having to rehab houses or the physical condition of an asset, but rehab the paper, the leases, the operating expenses, the management, which, my team and I were good at. So that was kind of a big light bulb moment for me, that then it, started to kind of give me the confidence to go like, I can buy one asset a year. I can find one deal a year. And therefore, that's when I really started to pivot away from single family real estate, go all in on commercial. And that, led me to my first boutique hotel, led me to my second, my third. And, as time went on too, the bare minimum of a $50,000 a year net income stream, every deal kind of was like, oh, well, this one's 70 or this one's 120, this one, so it allowed me to kind of play that game in a way that, really started moving the needle forward on my goals. And, commercial real estate is a fun space because it's less emotional. You're not dealing with people in their homes. You're dealing with businesses and numbers-based, ownership. So it really gives you the ability, if that's something that makes sense to you, to, really make data-driven decisions and play that game at a high level. And that made a lot more sense to me than, staying in the retail, more emotionally driven space.
Yeah, usually you're going from single family to multifamily, and it seems like you totally skipped it. Of course, you had your portfolio, single family, quads, duplexes.
Right.
What made you not want to go into a larger apartment complex?
It really was, if I always say I'm asset agnostic, and I'm also market agnostic. I own assets in a variety of different states now. I'm opportunistic. So
Yep.
like wherever I see the opportunity that I feel like my skill set can arbitrage some value out of, that's generally where I've parked capital and time. So if that first, deal that was brought to me in the commercial space was a multifamily deal, I probably would have done it. It just happened to be a retail shopping center. The next one just happened to be a boutique hotel. I started buying medical office buildings. I own, mobile home parks. So, but for me, it's all the mechanics of a lot of commercial real estate is very similar, right? Drive up income, stabilize and lower operating expenses to expand your net operating income. And by stabilizing that net operating income, you can compress your cap rate down as much as possible, depending on what that asset class allows, and inflate as much value into that asset. So for me, it was really just understanding those levers of how commercial real estate, value capture is created. And when I saw kind of, assets that I felt clear on what that, game plan of execution was, and that we could do that, and it made financial sense to take those risks, that ultimately led me into a lot of different asset classes.
Yeah, you just said it. So, you packaged it up. So it's creating the deal along the way. Basis is everything in real estate, and we've done a lot of the same. So it's not necessarily just one property type. It is where can you create value out of this property? Maybe
Right.
change it to a higher and better use than it's existing, or take something that's totally broken and fix it. Um, but multifamily, it is very, very hard to find the right basis to where it's meaningful, meaning that you're going to invest 2 years of your life, time, effort, and energy, and then you're going to have enough windfall after all that's said and done to make it fruitful.
Yeah. Yeah. Right. I mean, it's one of those things where, it is work, right? I mean, it's work, and it requires, I think in real estate, I've always had the mindset that, I'm going to choose the crock pot over the microwave. Like, don't get me wrong. I want something quick, cheap, and easy. But at the end of the day, like the best dishes are always made in the crock pot, and that takes time. And
Yeah.
so, I think a big mindset that I've seen most successful real estate investors, I mean, on my podcast for, I'm going on 11 years of the podcast. I've got over 1,000, episodes out of my podcast. And I would say overall, what I've learned from most of the successful, wealthy investors, business owners is they have a clear plan of execution and they just have stamina and staying power to not give up. One of my, kind of like mantras that I tell people, oh, well, how are you successful? I'm like, well, honestly, I've never been the fastest, never been the smartest, never been the strongest. I'm just dumb enough to believe in myself every day, and I'm smart enough to take action on what I think moves the needle forward, even if it's something small on a daily basis. Small things over time compound into big things. Most people just break the continuity in the small things that they're doing because they don't get the big result that they want in the timeline that they want. So for me, it's all about just having clear, plans of how we're going to execute on this asset, mitigating as much of that risk on the front end. You said it, right? Like you really make your money on the buy and you realize it and you receive it over time by executing at a high level. And so that's ultimately what we try and do, within our business group, in my investment model and how we operate and manage my assets.
Yeah, I think that's the difference between companies that are built around, I'm going to say, just management coming in versus founder-led. Founder-led, anything is going to outperform anything that's just put together through pieces.
Yeah,
Working on a Saturday night or a Sunday isn't necessary. It's just not work. It's you just keep building on what you've built, and
yeah,
that's the difference. That time that you put in, nights, evenings, weekends, it's not work to the founders, but it is work when you're an employee
right.
or a manager piece. So that time compounds over time too, and you do see the fruits of your labor eventually, hopefully. Um, but the boutique hotels, tell us a little bit about those assets.
Man, those are they've been fun, exciting, and by far the most stressful and
Yeah.
management intensive. I mean, you're not, while what I love about hospitality assets is, does it have cash flow? Yes. Does it have, the
After the
tax?
million paper cuts, does it have cash flow?
Yes. Yeah, exactly. Right. I mean, that's the challenge that a lot of people run into is, it is a very, very challenging asset to manage because you're not just buying a passive income stream or a passive income
Yeah.
asset. You are buying an active operating business that happens to be operating out. Yes, it has the cash flow. Yes, it has the tax incentives. The other component that I really loved is it aligned with my lifestyle. I got to take my kids and my family to my hotels. We created memories and got to enjoy many of, our best core memories as a family because of those hotel assets and the hospitality component of it. I can't take them, to get excited and tour around the liquor store, in one of my shopping centers, right? But that being said, you're buying a living, breathing organism 365, 24/7. You have people and employees in your asset. Therefore, the mindset needs to be is you are buying an active operating business. And, my first boutique hotel was a little bit smaller in key count, which really creates challenges of implementing leverage into that and just staying up in the owner's box. Like, well, I couldn't afford that, because to pay a manager salary and to do all these things, right? It was really going to eat up all my profits. So like I was that sweat equity in that deal. Our team was that sweat equity in that deal. So that kind of forced me to go, okay, I'm not going to do a smaller hotel. The next one has to be bigger so I can afford a manager and to create some leverage in that. So boutique hotels, while they're fun and they're sexy, and a lot of people got excited, during the STR and hospitality craze around the possibilities of
Mm-hmm.
hospitality assets. I think, the number one thing I try and tell people is like, this isn't passive income. This is
Yeah.
active operating income. And if you're not going to do it, then the model and, your P&L needs to support you having whatever leverage you feel like you need to have in place in order to keep it as passive as possible.
I think the biggest challenge to hospitality is you're relying solely on people to stand up the business. They have to show up. They have to tend the front desk. They have to clean the rooms. They have to
Yep.
all of these things, and that's where it becomes brain damaging. Is that multifamily? You're providing housing. Commercial real estate, commercial strip centers. You're providing space for the business to operate. the medical centers. So there's truly hands off. There's the hands off approach. Hospitality, that's where it's everything counts. You have your AR, your AP, full swing every week, coming and going. So it's
100%.
you've got your asset underneath, which is great. You've got your depreciation intact. You've got your operating income on top. But there are so many expenses to paper cuts, and I say it's death by many paper cuts because it just constantly rolls in.
Yeah. Yeah, and I
So
think that's where I always tell people is, like I've essentially touched pretty much every commercial asset, let's call it on the spectrum of like the far side is extreme high intensity management. And then, on the other end of the spectrum, completely absolute triple net, like outside of me filing my taxes and, reporting a K1, like I'm not answering anything. I'm not having to pay for anything. So that's the beauty of commercial real estate. Like on each side of that spectrum of like extremely management intensive and stressful and completely, passive. And, there's obviously a lot that fall within, in between, depending on how you structure those leases. I always tell people, like, based on what your goals are, when you want to achieve them by, how much time and energy you want to put into achieving those goals, there's an asset class and a model within commercial real estate that can align with that strategy and those goals, right? So I think it's just getting really clear on like, what is it that you want? What is it that you're willing to risk to get that? What's the time frame you want to achieve it in? And there's a model and a strategy in a market that will likely align with that.
yeah, and I think that the hotel play, it's attractive to real estate guys that are already in real estate because they want that accelerated cash flow to then fund buying more real estate. But it's like you don't know you don't know unless you know. You get into it, you see it, you're like, damn, okay, well we're doing it, we're rolling with it, and
If you
once you
would have
get the
told
engine
me,
in place, the components, the software, the process, the people,
yep,
it's not as heavy. All the one time setup things, it takes time to set up. I mean, it's less intensive, but it's still there.
yeah,
But again, we're
100%.
always looking for the next thing that can bolster the transactional income that can produce income to then purchase more real estate. So it's the trap in itself.
Yeah,
Um,
if you would have told me how much was going to go into it and how much stress, right out of the gate, I would have not done it. I'll just be totally honest. But once you get in there, right, you have to like. I think everybody has those failing forward moments in their journey. That's how you learn and that's how you grow. Like pain is unfortunately a part of the path of progress and expanding your skills, your confidence, your network, your resources. So it was, one of those things where like ignorance was bliss. And you just have to leverage those failing forward moments to, generate the ROI you're looking for in future opportunities, whether you stay in the same asset class or you just learn something that you parlay into, pivoting your model and strategy to something else. So I'm a big believer in like not, I know some people that like they stay in one asset class, one strategy, forever. And I've seen people that crush it and that works for them. I'm also somebody that like, I believe don't stay somewhere or do something longer than you felt called to do it, or like that feels aligned with your goals or not. So for me, like it's really important to keep recalibrating and making sure that I'm crystal clear on what my North Star is, what my 3 and 5 year vision is. So that way, like every decision that I'm making is through the filter of this is in alignment with that and is a stepping stone towards that, or this is a distraction. Because, for entrepreneurs, right, we're already easily distracted. But secondarily, I think when you can be good at a lot of things, it'll prevent you from being great at one thing.
mhm.
And so that's something that, I know what I'm great at. I'm great at creative finance and deal structuring. All of the other things, I surround myself with people who are way better at that than me. But I try and stay focused in that, lane for myself. And that's like my fast lane on my freeway of, commercial real estate assets and skills. But I think it's important for people to know, like, what is their fast lane and how does that tie in with your business plan and the vehicle you're looking to build wealth in and leverage to, move the needle forward in your life and your finances and your business. And that's something that I'm constantly trying to recalibrate and just ensure that I am staying congruent and aligned with my decision making to ensure that I'm not, taking an off ramp and detouring somewhere that I shouldn't be.
Yeah, that's time. That's the biggest piece is where you're spending your time at, and is it on your trajectory where you're wanting to go. How are you all utilizing AI in your operations?
Very heavily. So we've always, like in my hotels, we were kind of the first in the boutique space to really like implement automated tech stacks and contactless hotels. I mean, we've been
Or
written up
using like
in
Akia?
no, we had a kind of like a custom tech stack that we built in the
Okay.
hotels. But that being said, we've got, custom built AI agents within my business. We've got deal analyzers that analyze, pretty much any asset class that you can take an OM, a rent roll, a lease and funnel all of this through our LLM, and have, an analysis within 60 seconds. So those have been extremely helpful. Anytime that I look at creating an AI agent within our business, because there are so many components of a real estate business that really don't need to be done by human, and oftentimes can be done way better with something like AI being leveraged and implemented in that. We are consistently, every single one of our company core values is AI first. So if you've got a problem, it better not come to my desk unless you've gone to AI first to try to solve it. Like it used to be, hey, go and Google that. I'm sure you can figure that out. Now it's like, no, we know you have a solution and can find an answer to that problem through AI. So we are very adamant about every single person on our team uses AI all day, every day. It's something that we believe is going to continue to, streamline, obviously operations. It's going to be, competitive edge that we can leverage in assets and strategy. Obviously from an operating expense perspective, to have somebody that is, working for us 24/7, 365, that I don't have to pay, that's not complaining, that I don't have payroll risk with, HR issues with, like those are tools that we're continuing to lean into. And obviously I still feel like we're very early in that process. But it is really fun, to see how it's continuing to get leveraged and evolve in the prop tech and the real estate space in ways that obviously this industry moves relatively slow and is a little long in the tooth in certain areas of the business. So those are things that we're heavily involved and engaged in.
Yeah, I think there's a lot there's a lot that's going to be coming down the pipe here in 2 to 3 years with just AI and humanoids in general, and then what is the long term? I'm going to call it long term damage to just the job industry.
Mm-hmm.
Or we're the horse. We're automating out the horse. So what that looks like on buying power, on real estate values, if people can't buy the real estate because their buying power is not there. A lot of the middle manager industries are going to go away. There's not going to exist. So we'll see what happens. We dropped our entire rent roll into let's call it ChatGPT, and seeing our exposure on geography and then tenant jobs, and kind of see your exposure on what does the disruption look like on your rent roll. And if anything, you need to constantly prepare yourself for what lies ahead too, and just get yourself in a position where you don't want to be disrupted by anything, whether it's market related, interest rate related, um, jobs related. You want to
Yep.
constantly be forward on your thinking on what can this thing do that could negatively impact your business too. So
Oh, 100%.
we'll
Yeah. I
see.
mean, one good example, and to your point, I think, cause that is a concern, right? Like, every disruption has, I think, there's a double-edged sword. It has good and it's got bad, right? Every time, I'll just go back to the invention of the car. I'm sure, all of the people that owned horses were horseshoemans that worked in the horse. There was some major, concerns, right? Same thing with the internet when that rolled around. Same thing. So every time there is a disruption, I try and be an early adopter, because at the end of the day, I want to win. So
Well,
like
you've got an
I need to be,
obligation to be. Yeah,
yeah, right.
100%. Yeah.
So for us, we're constantly looking at, how we can leverage and, obviously mitigate and build safety nets around some of the potential risks and threats that, can be seen and, that we think are going to be there. But at the same time, we're just trying to focus on the, opportunity and how to leverage it to the fullest of our ability. I mean, I was spending a lot of money on attorneys going through leases and redlining and
Right.
negotiating and answering questions. And, not that I hang my hat on everything that ChatGPT or, some of our AI models say, but, the fact that they can do something that I was paying an attorney $350 to $500 to $750 an hour, and they can do it within 10 seconds. And I can trust that maybe 80% of that is pretty good. those are game changers, right? But I do think industry will evolve. There will be new jobs and things that, will come in industry and commerce that will come out of this. We're paying a lot of attention to, blockchain and tokenization of the commercial or just the real estate industry as a whole, and how that should streamline some inefficiencies and third and fourth parties that maybe aren't necessarily as needed and involved in the future of what real estate's going to look like. So I'm pretty excited about it, to be totally honest.
Yeah, no, and me and you, our companies, it allows us to do much more on a. We're not taking away from anything. We're just compounding what we already have, putting more in place. And if
Yep.
anything, I think you still have to have somebody monitoring what AI is spitting out before you
100%.
present it or use it, whether it's me, you, or somebody else. But it's the P&Gs of the world who are, locally eliminating like 7,000 jobs due to optimization, they're calling it. What does that look like on the long-term effect? We have to use it to even, I think that we've got an obligation to our stakeholders, ourselves, our families, to implement AI in every capacity possible.
Yep.
It's but when you break it down, what does it look like on the people that are paying rent, that are keeping those jobs in the strip centers, what does that look like? That's so we'll see. All we will ultimately see, but it's being ahead and hopefully being able to pivot and things create other jobs too. So we'll see.
It's, dude, you said it. It's mind-blowing in many ways. It is absolutely, scary in so many other ways, right? And at the end of the day, I can't stop it. You can't stop it,
Right.
right?
No
So
way.
the only thing we can do is embrace it. I was just trying to be on the front lines of the conversation and see and hear what, because really it's the trickle down effect, right? It's like, what is the big dogs, guys and girls doing, and how is that going to impact industry and kind of trickle down the tree? So, my little guy, compared to, the big Vanguards and BlackRocks of the world and all the stuff that they're doing, like, I can't stop it. So for me, it's just more so of like, they're going to create some kind of wave, and it's going to have a wake, and I want to just find a way to ride it, to, protect myself and my downside. And obviously, if we do that, we can, protect and insulate our employees. We can protect and insulate the businesses, the leases, the community that, our assets operate within. And so I feel like that's my fiduciary, right? Is like, I know that this is a potential threat to many aspects of the way life and business has been done for, as long as we can remember. And so my job is to ensure that, knowing that this is happening, I have a fiduciary responsibility to myself, to my investors, to my, leaseholders, my community, that I'm at least being a part of that conversation and figuring out how I can leverage it in a way that positively impacts, what we're doing, and what we do impacts, because obviously we know there's going to be some challenges that presents itself, but I do believe that, there's insane opportunity that obviously, we want to be a part of.
Oh, for sure. Absolutely. Very cool. If somebody's listening right now and they want to figure out how to get in real estate, not sure how, but they know they want to be a part of it, how would you recommend their path, their journey go?
Yeah, I think it just depends on like what path of real estate are you looking to march down, right? There's so many different communities out there that can teach you a particular strategy. There's coaches, there's, masterminds, there's conferences that you can then go to. Obviously, listening to amazing podcasts like yours, my podcast, Millionaire Mindcast, is a great way to, at least learn more about commercial real estate. We have a free course for commercial real estate investing beginners, that if anybody wants to take that, they can just text the word free to 844-447-1555, and that'll just get you access to a little free commercial real estate course. If you're a passive investor and you're looking for passive investment opportunities in commercial real estate, you can text the word deals to 844-447-1555. And that's a way that, we do a lot of education on that kind of stuff. But I just always say, like, you grow into the conversation and the environment that you put yourself in. So depending on what kind of results that you want, just find those conversations and environments with the people who have the reputation, the track record that you feel most aligned with, and engage, lean in, right? That's the ultimate way that I've been able to connect dots on, gaps that I've had in my own life, business, investors, deals, just education wise, it's just getting in those rooms, getting in those conversations, and participating.
Yep, you said it. Get in the room, be a part of the conversation, and just get active. So, very cool. If somebody wants to reach out to you, learn more about your companies, possibly invest with you on your next deal, how can they get a hold of you?
Yeah, I mean, that deals, text deals to 844-447-1555. We've got passive investors all around the country that engage with us in that capacity, or just on social media. I respond and reach out to anybody that connects with me from a podcast. My handle is official Mattia, Mattya, across all my platforms. So I always love hearing from anybody that heard heard me on a podcast or listens to our podcast. It's probably the easiest and best way, and I respond to all messages.
Cool. Matt, definitely appreciate your time today. Look forward to following you, and we will talk soon. Thank you.
Thanks, Josh.
All right. Bye.